Hi everyone, welcome to Coffee with Z episode 11. Thank you for joining us. We do a few questions. Alfie, fire the questions off.
Great. Okay, first question is, what do I need to get a mortgage?
This is so important. This is a question I get constantly asked. What do I need, Z, to get a mortgage? Generally, you have to check with your lender, but generally most lenders ask for 2 years worth of tax returns. And that's your self-assessment and something called a tax overview. And they work out the average over those 2 years of what your income was, and that's what they base your mortgage, which tends to be 4 to 5 times that value. It is, some people even go higher now, so you need to get a good mortgage provider and then liaise with your accountant and get those 2 items.
Great. Okay. Second question is, can you own a bicycle in the company tax-free?
Love this question. If you've got a limited company and you want to buy a bicycle, yes you can, because you can obviously cycle to work or use that if you're consulting to go to your jobs if you feel confident in riding the bicycle. The thing you've got to be careful of is, in order to not trigger something called benefit in kind tax off, if you've got more than one person in the company, that bicycle's got to be available for everyone. So I would keep it at the office or where you've got a communal bit where everyone can access. Hope that makes sense.
Perfect. So what are the impacts of exiting a discretionary trust with property?
That's a great question, Alfie, around discretionary trusts. The exit charges are dependent on what's in the discretionary trust at the time you exit. And you can do some planning around that to make sure you minimize, because what it ends up being is done on your quarters, how long you've had it. So if you've had it and it's done on 10-year periods, so if you've had it for 7 years, that's 28 quarters out of 40, and then there's a complicated calculation that's done, and you need to evaluate that. Why are you exiting from the discretionary trust? Because if you take the property out of the discretionary trust, you actually bring it back into your estate. And often when we do this evaluation, it's better to leave it in the discretionary trust than take it out, because the tax on death is 40% when you pass, whereas when you've got it in discretionary trust, all you have to worry about is the 6% charge every 10 years. It is a very complex one, and if people require us to go more, I can do a bit more of a detailed video on it.
Perfect. Okay, so last question is, what is the rate of VAT on new build property?
So this is a property developer question, isn't it? So the reason why we're clarifying this, because a lot of people don't understand that when you build a new build property, long as you've got planning permission and it's backed up by that, it's actually zero rated VAT, which is quite beneficial, because that means you can claim all your costs back, which tend to have 20% VAT, and then when you sell it, it only has 0%. The complication comes is that's not on every type of cost. So if you've got professional fees like accountant, tax advisors or architects, you pay 20% VAT on that, but yet you can still claim it all back. So you need to get your evaluation done on how you structure this, especially for property developers, and how you can make it beneficial to all the parties.
Fantastic. Okay, that's about it then.
Perfect. Thank you for watching Coffee with Z episode 11. I've probably watched the bloopers where I got that all wrong. And if there's any comments or any other aspects that you want to hear from us about, please comment below. And thank you for watching. Hi everyone, welcome to Coffee with Z episode 11.
11.
Let me redo that. That's the blooper. 11. Do it like that.
Yeah, if you want to.
11. Coffee. All right. Let me redo that. That's the blooper.